Hi there, welcome to Kneppy Invest. Time to have a look at six financial year 22 results. I'll try to get through this video fairly quickly. I'm planning on finishing this video within 10 minutes. So let's get through it fairly quickly. And before we have a look at six financial year 22 results, this is the plan moving forward for these financial year 22 results video. I've already finished or preparing BHP, so I'll do that in the next few days. Also have a look at Pro Medicus, Bapcor, Reliance Worldwide Corporation, and a fairly new company, not new, but company I haven't really looked at yet. The share price of this company and the valuation of this company keeps on climbing, even though the market's in a free fall. And that is Prime Financial Group. I think the T code is PFG. It is a very small company, but it is profitable and it is growing. If you have any suggestions for companies you'd like me to do in this financial year 22 result series, leave them in the comment section of this video, preferably companies that are growing and are profitable. And when I say growing, it can refer to revenue, profit, operating cash flow, or free cash flow. The first thing I usually do when I look at the financial results of a company is determine the quality of that particular company. For SEEK, it is not that hard. I would put SEEK in the high quality area, which means I'm all about the value when it comes to this company. If I saw the PE ratio of SEEK at 10, I would be going all in, regardless of the share price trend and the sentiment behind the company, because I do think there's a lot of growth for this company over the next few decades. Actually, we won't say few decades, we'll say 1 decade. And if I do see a low valuation of the company, I would be very interested in taking a large position in the company. So SEEK is a high quality company, in my opinion. Now, one of the things I have problems with a larger company is sometimes they can become quite complex. And I did find SEEK to be a complex company when you look at their financial statements, and I won't look at any financial statements in this video today. And also when you just look at what the company is doing now, what they do is fairly simple. They're all about helping people find jobs. But a few years ago, or maybe it was just 1 year ago, they sort of separated some of their assets into a SEEK growth fund. And this particular page, which was found on page 43 of their presentation, sort of shows you all the assets this company has, but a lot of the assets this company have or used to have are now in the SEEK growth fund. And I'm not exactly sure the relationship between SEEK and SEEK growth fund. I'm not sure if SEEK owns a certain percentage, like 80% or so. I did see that number at one point. But some of the assets, and probably the best known assets, including SEEK ANZ, SEEK Asia, Brazil Online, and Platform Support, are assets owned and managed by SEEK. Now, there are a couple of assets owned by SEEK, but managed by the fund's manager. That is Xiaopin and ESVs and Job Adder. And then within the SEEK Growth Fund, which are assets owned by SEEK Growth Fund and managed by the fund manager, include a fair few businesses in here within the online education area, human resources, SaaS, and contingent labor. I won't go through all these assets, but there are a lot of assets within the SEEK Growth Fund. Now, this sort of separation of these assets into the SEEK Growth Fund happened 1 year or maybe 2 years ago, and I sort of understand why they did it, sort of to separate the management of these assets from the SEEK management. And the thinking was these assets within the SEEK Growth Fund will be able to perform better. But it just makes the whole SEEK company a little bit more complicated. Now, a little bit more complicated is not a bad thing, but it just makes it more complicated. One of the ways I know if or determine if a company is high quality or low quality is just by looking at the long-term chart. So this is SEEK's chart over the past 10 years, and we do see the share price going from the bottom left to the top right. I've also drawn a diagonal line. It's a blue line, fairly small blue line. And whenever the share price gets below that blue line, which doesn't happen all that often, you could maybe say this is a trend line, but that the share price right now is below that trend line. And whenever the share price gets below that trend line, might be a good time to take a position in this company. So you could argue just based off the chart, just based off where the share price is right now, and it's just above a nice little support area. We'll be able to see that support area when we look at the daily chart, you might be able to argue with me now is a good time to take a position in this company, particularly if you are bullish about the long-term future of this company over the next decade. Now onto the financial year 22 results for SEEK. Now, not only is the company itself complicated because of this SEEK Growth Fund, I also found their financial results fairly complicated as well. A lot of discontinuing operations and continuing operations. So I think you really had to look at the results, particularly over the last 2 or 3 years, with a bit of, won't say grain of salt, but you do have to understand what's been happening in this company over the last few years. You'll be able to appreciate what has been happening just by looking at the revenue, which I'll show you in the next slide. However, we're just focusing on the financial year 22 results in this particular slide, not looking at the past, although you could say that financial year 22 is now in the past, and exactly is in the past. Now, the share price of SEEK is $20, and that means the markup of this company is $7.11 billion. Revenue of $1.12 billion, fairly good growth from last year. Profit of $40.8 million, so nice margins there when you compare the revenue to the profit, so pretty good margins, and you should expect pretty good margins with SEEK. Operating cash flow, $394.4 million, and earnings per share for this company are at 67.6 cents. So just comparing earnings per share to the share price, straight away you'll be able to see that the PE ratio of this company is hovering around about 30. So yeah, so I've already mentioned that the business is complicated and financial results are complicated, and you'll see this massive drop in revenue when you look at the revenue history for the company. This was in 2020. Now, this is through ticker. Now, back in 2020, SEEK reported a different number than 650.6 million, because this is a time when they did sell out of a large portion of their Xiaopin, so that's why the revenue fell by a lot. But what ticker have done here, they've restated the revenue because of SEEK's financial year 21 financial results or statement, because in that statement it actually did restate the revenue in financial year 2020. So 650.6 million is not what SEEK actually reported. It's just restated numbers based off the selling or the divestment, I think you could call it, of Xiaopin. Now, the main thing you'll see here, if you sort of disregard the massive decrease in revenue in 2020, is that revenue is increasing year on year. It's fairly consistent growth. Now, there are some years where revenue doesn't grow by all that much, but it consistently grows. And in fact, from financial year 21 to financial year 22, we saw revenue grow from 760 million to 1.11 million. So really good growth in the past year. And if we do calculate, and what I've done here with the compound annual growth rate in revenue, I've broken it out in 2 periods, from 2012 to 2019, and then 2020 to 2022. And revenue has been growing at a really quick rate since 2012, 19.6% per year from 2012 to 2019, and 31% per year over the past 3 years. The other thing I've included on this particular slide is operating margins. So probably the biggest concern for me for SEEK going into, say, 2020 was decreasing operating margins. In fact, operating margins fell from 39% to 24%. But maybe because of this divestment of Xiaopin, we have seen operating margins starting to climb back up. So over the last 2 years, operating margins have moved higher by about 12%, up to 35%. Now, I've gone completely past the financial statements, because when you do look at the balance sheet, profit and loss statement, the cash flow statement, it's fairly complicated for this company. And I do find that for bigger companies, the financial statements tend to become more complicated. It's one of the things why I'm attracted to smaller cap companies, because their financial statements tend to be way less complicated than companies like SEEK. But what I've done here is just looked at where the revenue for this company is derived at based off geography. So by far, the biggest geography in terms of revenue is Australia, $764 million in financial year 22. Second is Southeast Asia, $203 million. So I think we're talking about Thailand, Indonesia, Singapore, Malaysia, those areas, and we have seen pretty good growth in Southeast Asia, increasing from 146 million to 202 million. Brazil, unfortunately, has gone backwards from 2021, from 30 million to 28 million. New Zealand is showing pretty good growth, increasing from 56 million to 85 million. Mexico, nice growth there, about 50% or just under 50%, increasing from 21 million to 30 million. United Kingdom and Europe, fairly small in terms of revenue, only $5 million of revenue in the past year, and rest of the world only at 2.7. So this company, Seek, is growing its business around the world. And that's one of the reasons why I think Seek could continue to grow at quite a good rate over the next decade, just because the rest of the world is their oyster. So they're just not based in, well, they're based in Australia, but they just don't have operations only in Australia. Now onto the valuation metrics for Seek, and this is where it becomes very important to see if maybe there is some value for Seek based off the current valuation metrics. So current is right now. I think in the next slide, we'll look at historical valuation metrics and see if the current valuation metrics, I think we're going to look at price to operating cash flow. I could be mistaken, but I want to compare the current valuation metrics to historical ranges. I like to do that, not just look at one number in isolation. So PE ratio 29.5. Now, straight away, I might, just based off this one number, I might think Seek is starting to look better value. But if you are thinking about a margin of safety, you might be thinking if the PE ratio of Seek gets below 20, that could be a time to take a position in this company with a good margin of safety. Price to sales ratio 6.3, price to operating cash flow 18. So we are getting fairly low when it comes to that. And we'll be able to look at that particular price to operating cash flow right now at 18 and compare it to the price to operating cash flow this company usually sees, and that is a 10-year period of history. And I also did a reverse DCF. So I just wanted to see, based off there, I think it was operating cash flow, I just wanted to see what the growth rate would have to be to justify the current valuation. And that growth rate is only 12.2% per year. And I definitely think Seek can attain that sort of growth over the next 10 years. If I did a reverse DCF and I saw a number like 1%, I would be really interested in taking a position in this company. At this point in time, I am not a shareholder of Seek. I don't think there is great value in this company right now, but if I did see great value, that's when I would really become interested in taking a position in this company. And right now, I don't think, just based off these numbers, there is great value at this point in time. Now, me saying right now there's may not be great value is based off those numbers. And those numbers, you sort of have blinkers on because they're just looking at what the right now. And we have no context. That's probably the best way to put it. There is no context. So price operating cash flow of 18, that could be really high or really low based off where you typically find the price operating cash flow of this company, or even the PE ratio of 29.5 could be really high for this company or really low. And if it's really low, maybe now is a good time to take a position in Seek. So this is looking at the price operating cash flow of Seek over the past 10 years. So where does the price operating cash flow of 18 stack up on a historical basis? So if we go back through the years, you can see whenever the price operating cash flow of this company gets below 16, it doesn't stay there for very long. Now, it did stay there for about 18 months back in 2015 into 2017. And it stayed there for a very short period of time during the COVID-19 financial panic. But anytime you see the price operating cash flow of this company get below 16, that is possibly telling us that there is maybe some value in the company at that point in time. On the flip side, when the price operating cash flow gets above 30, you could argue it's getting overvalued. And we did see Seek being overvalued for a long period of time during 2021 into the start of 2022, when the price operating cash flow of this company reached as high as 40. So I don't even have to argue this point. Seek was overvalued at that point in time. I think the share price got as high as $35 or $40, and the share price has almost halved since those highs. So the most important thing here is the price of operating cash flow of Seek is 18, and is moving towards an area where we might see some good value for this company. One of the interesting slides I did find in SEEK's presentation is just this financial year 23 guidance. And in a way, any sort of guidance a company can give in their financial year results or in their AGM is a sort of information that will set the share price higher or lower, because this is what the market is looking for, any sort of guidance or any sort of trading update, because the market is always forward looking. And what I found really interesting around SEEK's financial year 23 guidance is really the lack of growth here. So this company's management is not expecting much growth at all in financial year 23. So a little bit of growth in revenue, a little bit of growth in EBITDA, and a little bit of growth in profit, but not by much. So that gives there is a better chance now that, because they're being possibly conservative, that there will be profit upgrades in the future for SEEK, particularly if some of their assumptions, and they do list key assumptions here, about 6 of them, for instance, capex in the range of $170 to $200 million, continuation of positive hiring sentiment across Asia Pacific with volume trends consistent, no material change in customer or product mix. So there is a potential that if they are being a little bit too conservative, there will be some profit upgrades in SEEK's future. And that is when the market will get excited. And that's when we might see a breakout in the share price. Doesn't mean it would happen. Maybe these forecast numbers are going to be exactly what they see for financial year 23. But I do like management being conservative in their forecast, just because the market loves when a company is conservative, when a company produces profit upgrades. On the flip side, I hate it when management of companies tend to be way too gung-ho with their forecast, because markets absolutely hate when a company has to give a profit downgrade. So hopefully SEEK's management is being a little bit too conservative here, and we will see some profit upgrades for this company over the next 6 to 9 months. Now let's have a look at the short-term chart. This is just the daily chart going back to June 2020. The reason I went that far back is because the share price of SEEK is just above a nice little support level at $19. And the reason that is a nice support level really began way back in August of 2020, because the share price hit $19 twice, once in August, then again in September, and then absolutely took off. In fact, the share price almost doubled from then all the way through to late 2021. Share price reached a high of $36, so not quite 38. I thought it was $38 or $40, but $36 in November and December of last year. And then the share price pulled back all the way down to $19, and that was in the June. Remember, June was a bad month for the ASX, and that was a low for SEEK's share price. But again, it rebounded off that support level that was set up back in 2020. Share price actually increased from $19 to about $24, $25, and then pulled back all the way back to $19, and then took off again. So the market has been testing that support level at 19, and it has held firm at this point in time. Current share price of SEEK is $20, so only $1 above $19, that support level. So if we see further weakness in the market, maybe $19 will be tested again, and maybe $19 will be broken. And if it does break, that would be a bearish signal from the market. And to be honest with you, as I am not a shareholder of this company, and I probably wouldn't say no to holding this company for the long term if I see some good value, it wouldn't bother me at all to see the share price fall to say $15, $14, because at those levels, I probably would see some pretty good value with this company. For the sake of shareholders, I hope that doesn't happen. For the sake of me, hoping it does maybe happen. So if you do have any thoughts about SEEK, about the future of this company, now, I haven't even mentioned my thoughts about the future of this company. So right now, we do have a tight labour market. And I actually believe we're going to see a tight labour market be a problem over the next few decades unless we really accelerate automation. So a tight labour market is going to be beneficial for SEEK. And that's another reason I am bullish about the long-term potential of this company. So if you disagree with me, anything I've said in this video, leave your disagreements, your thoughts, your questions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.